To make a move like that, you have to have kahunas and conviction.
Long term, I'm bullish. We could see about a 20% correction next year.
This is Josh Jelinski, the financial quarterback. Don't touch that dial.
Okay, we're back with Tom Wheelwright talking about the Inflation Reduction Act. Tom Wheelwright needs no introduction to most of our listeners. Best-selling author, Rich Dad, Poor Dad, tax guru, best-selling author of the book Tax-Free Wealth, arguably one of the smartest tax minds in the country, if not the world, and the author of the Win-Win Wealth Strategy, Inflation Reduction Act. What is it, and what do our listeners need to know about it?
Yeah, so most of the money comes from big corporations, so that's not a big tax increase that people will see. They might see it as the stock market declines, but they won't see it otherwise. There's a stock buyback tax. There's a corporate minimum tax if you make $1 billion or more. What people are going to see are two things. One is, three. One's the increase in IRS audits. That's going to be the most visible. And the second is the extension and amplification of the solar and renewable energy tax credits. And the third is the extension of the business loss limitation, which is one thing I'm not hearing anybody talk about.
So let's talk about the solar. I've been wanting to get solar on my house and business since having you on for the last, 8 months regularly. I mean, we've had you on before for years, but you got me like really turned on to this is the year I'm going to take the plunge and buy solar. So the question on my mind is do I do solar this year or do I now wait till next year?
You don't have to wait till next year. They actually retroactively increase the credit to 30%. So those of us, like I'm in the middle of doing solar on my business, and I'll get that extra 4% credit this year. If you wait till next year, there's actually some areas of the country, there's some additional credits, and I'm still digging into them. We're doing a town hall on Monday. Wealthability is my company, and I'll get into it over the weekend so that I know all the details. But there are some additional tacked on credit. So not only can you get a 30% credit, but in some cases you can get an additional 20%. So 50% credit. Now remember, if you're a business, you also get to deduct most of the cost of that against your income. So the government's literally paying you to make this investment. They want you to do solar.
So what was it before? You said 4%, so was it 26%?
Yeah, so it's 26%. So it had gone down to 26. It's scheduled to go to 22, okay, next year. And then it's scheduled to go all the way down to 10 for businesses.
Wow.
So what it got extended. It's going to be 30% for most businesses and most individuals. It's 30% regardless. There are some rules for paying union wages, which is, I think, the most fascinating part of the law. But those only apply if you've got a 1 megawatt production facility or more. And there are very few businesses that are going to have a 1 megawatt production facility.
Wow. So is the megawatt thing like if you're a Bitcoin miner, so I should become a solar paneling producing Bitcoin miner?
Yeah, absolutely. It would apply there. It applies for the solar farms. It applies for the big industrial complexes. Like, for example, if Intel were to go in and go big on solar with their, gigantic manufacturing facilities, then that would apply there. And basically all it says is that you don't have to hire union people. That would be illegal. They couldn't do that under the Constitution. But you do have to pay the wages as if they were union people. So that's a really interesting nod towards employees and nod towards particularly union employees. It very much is an incentive to use union labor.
Yeah, wow. So use unions, buy solar, although I don't think union labor will still be cheaper. So we got unions, we got solar, we got the IRS is being expanded aggressively. And you said a third thing, the business loss rules. Talk about that.
Business loss limitation. This is big for our listeners here because, prior to 2021, any any of your business losses, and that could include real estate losses from accelerated depreciation. It could include losses because you have a startup business. Those could offset any income, okay, including wages. Then what happened is we got this law. The law actually came into play in 2017, but then it got, moved because of the pandemic. And what this bill does is extends it. What that means is that if you have big losses from real estate, they can only offset business income and then $500,000 of wages, interest, dividends, and retirement income. So you can't wipe out your tax anymore. It's a kind of a minimum tax is what it really is. And it means that people who, for example, they've learned about being a real estate professional, they go, oh, my spouse is at home. They can be a real estate professional pretty easily. And those people, are thinking, well, geez, I have my spouse is a real estate professional. I'm a doctor making $1 million a year. You no longer can wipe out your doctor's salary. You can only wipe out $500,000 of it.
Wow. So really then the max loss you can wipe out is $500,000.
Yeah, outside of business income. Now, business income, you can wipe it all out. So this is another nod towards having a business, right? If you make your money as a business in a business, a pass-through business like an S corporation or a partnership, you don't have this limitation. You only have this limitation if you make your money as an employee or through interest, dividends, and retirement.
So LLCs would be also included in that?
As long as they're taxed. Again, LLCs, this is a big misnomer, Josh. I'm glad you brought it up. People think LLCs are some kind of a tax animal, but they're not. They're actually just a legal animal. And you can elect to tax an LLC any way you want. You can elect to tax an LLC as a corporation, an S corporation, a partnership. They can be pretty much anything you want other than a trust. And so an LLC could be, excuse me, an LLC could be absolutely used. But the important thing is that it's business income and that you're not a C corporation taking dividends.
So the Inflation Reduction Act, what does it do to individual taxes?
Outside of the IRS audits and the business loss limitation and the solar credits, not much. There's no tax rates that went up. There's nothing significant there. I think big corporations are going to see this is really challenging for them because you're basing a minimum tax, this 15% minimum tax on book income, which is, by the way, book income is decided by accountants out of New Jersey, the FASB, not by Congress. So it's a little challenging. But I think in the average individual probably won't see much at all. They certainly won't see a reduction in inflation. Now, one thing that is in this act, anybody who's on Medicare will see a reduction in the cost of their prescriptions. Okay, if you're on Medicare, because they actually are reducing the cost of prescriptions. However, what that means is if you force pharmaceuticals to reduce their price to Medicare, then what are they going to do with the rest of us that aren't on Medicare, right? Chances are our prices are going to go up. So it's questionable whether it's the Inflation Reduction Act. I actually call it the Business Disruption Act. So. Yeah,
because they're going after small businesses. The masseuse getting Venmo payments. I imagine. I find it shocking when people use Venmo, right?
Yeah.
They publicize what they do. And I don't know if you've seen this, it's a list of your friends. And if you were the IRS, you could basically I'm going to go after the hairdresser, the person doing nails, the masseuse, all of these hidden economies. Do you hear about that? I mean, is that what they're using some of this money for?
They're in New York. New York does a really good job with their technology. New York State. And what they do, for example, let me give you an example. So they will look at the number of lottery tickets purchased at a store, a convenience store, or a little grocery store. And they will calculate, they can calculate pretty well with AI and everything because they use that. They can calculate about how much of gross receipts they should have in the store. So if the store shows that they're reporting substantially less income than would be typical for a store that had that much in lottery ticket sales, they will actually send they'll send an audit assessment.
Wow.
So this is the type of thing. I mean, this is why I think the technology is such an important part. I mean, if the IRS really wants to go after enforcement, it's going to have to go after it through technology. Going after it through auditors is just a bad idea.
Yeah, I think the tech is good. I mean, there are so many of these. I was on the Jersey Shore boardwalk, and I mean, for years, all of these companies only took cash, and you know what that means,
right?
And eventually, one of them, a famous pizza shop guy, he got, I think, indicted, and they let him out every summer to make pizzas to pay his debt.
That's funny.
I don't know if you've heard of this story. Like, I mean, world famous pizza place on the boardwalk, and was cash only for a number of years. Now they take credit cards. Now, I mean, heck, I used to find, you don't have wads of cash in your bathing suit when you're going, I prefer a credit card. I give that place more business now. But he comes out, I think he had a 5-year sentence, and every summer, he probably got out 18 months in good behavior, but every summer they would let him out to make pizzas to pay his debt. But I'd rather go after those types of people who don't pay taxes that they should pay normally.
Well, and that's why, Josh, you hear this idea that they're only going to go after people making more than $400,000, but that's not where most of the tax cheating is. Most of the tax cheating is just like you're talking about. It's the little pizza place on the boardwalk. It's it's the dry cleaners. It's the masseuse. It's the nail salon. It's those people who take cash payments, right? And so what, Janet Yellen was really crafty when she was talking about this $400,000 limit. What she said was the proportion of audits of people making under $400,000 is not going to go up. Well, right now, 90% of audits are for people making under $400,000. So that means that proportionally, those audits are going to go up. So if you double the IRS budget, you would expect double the audits of people making less than $400,000. So people think, well, I don't have to worry about it. I don't make $400,000. That is not the case. You're gonna start seeing a massive increase of audits within the next 3 to 4 years.
And be careful. Be careful with your Venmo receipt. Here's the thing. My advice to you people making whatever 50 to 200 grand a year doing this cash business, just be legit. But if you're making 100 grand a year in one of these businesses, you don't need to cheat on your taxes.
Right.
The strategies that you talk about can save them on their taxes, and they're legit. So you don't want to end up like the guy with the pizza shop. This guy made millions of dollars a year in pizza, by the way. He could easily have afforded the tax planning work, the financial planning work, but he chose not to, so it's crazy.
Yeah, it's just not that hard. I mean, I've written two best-selling books on this subject, Tax-Free Wealth and Win-Win Wealth. And it's not that hard to reduce your taxes. It's actually pretty simple. I mean, we were just talking about the solar credits. I mean, what an easy way to reduce your taxes and reduce your utility bills. I mean, your return on investment, that when I in the Win-Win Wealth strategy, I actually go through 7 different investments where you see not just how the government contributes, but what kind of money you make by making these investments. So, the goal is let's build wealth and reduce our taxes. Let's not cheat on our taxes. It's a much better way to do it because you're actually building wealth. You're not just reducing your taxes.
Oh, fantastic. So let's work through that. So somebody wants to buy solar, the solar, whatever, 100 grand for their commercial building.
Yep.
I mean, I've seen quotes from 30 to 100 grand, depending on it's a house or a building or whatever. Let's say it's 100 grand. So they work through the cost savings on 100 grand solar for somebody's business.
So I'm doing this right now on my building in Arizona, and it's about $100,000 actually. Interestingly enough, it's right at about $100,000, and we pay about $7,000 a year in utility bills. So that means on $100,000, that would be a 7% return on investment, but it's actually not. It's actually 3 times that. It's really a 21% or 22% return. And here's why. Because I'm not going to put in $100,000. I get a $30,000 credit. So now I'm down to $70,000 I'm putting in. I get an $85,000 deduction. Okay. And at a 40% tax bracket, because you get to include your state taxes in that deduction, at a 40% tax bracket, that's $34,000. So now I'm not putting in $100,000. I'm not even putting in $70,000. I'm putting in $36,000. Well, the return, $7,000 divided by $36,000 is closer to 20% than it is to 7%. So you're really getting a much higher return on your investment than you would have expected because you're not paying all the costs. The government's contributing a large lion's share of the cost. Do you do solar on your house? Yeah, you can do it on your house. You don't get the deduction, you get the credit. So you get a 30% credit. So in your house situation, you'd be getting a 30% credit. So instead of $100,000, well, it's probably not going to cost you $100,000 to do your house.
Let's say it costs what, 50 grand?
Say 50,000. Yeah, it's not going to be 50,000. It's going to be 35,000, right? Okay. Because you're going to get a $15,000 credit. And so you calculate your savings based on 35,000. Don't calculate it based on, and the thing with the credits, doesn't matter remember, it doesn't matter what tax bracket you're in. You know, if you're in a 40% bracket or a 20% bracket, a credit is worth the same because it's dollar for dollar. It's not a deduction. It's not reducing your income. It's actually reducing your tax.
Wow.
So the credits are they're kind of the super tax benefits.
That's amazing. So it's a business credit. It's a personal deduction. Is that fair to say?
No, you get the credits for both business and personal.
Okay.
You only get the deduction on your business.